But to talk markets and where we should be focused in terms of equities, Shawn Hickman is joining us from Market Matters. Shawn, good morning. Happy New Year.
Happy New Year to you too.
Back on the desk. I'm sure you've given 2023 lots of thought. What do you think? It's been pretty good so far.
It's been very good so far. BHP made new all-time highs yesterday. CBA is a cappuccino away. Only CSL's lagging out of the top three, so it is very strong. Markets are ASX 200, less than 4% away from the all-time high. So,
can it continue?
Oh, people might be bearish. I think investors are a bit bearish, but the market's not. So can it continue? I don't think we should be looking at the index. And I don't know if you've got the chart up I sent through this morning, but the first thing was the market's gone sideways as a market for the last 12, 18 months. I don't think you should be focusing on the index. I think you should be focusing beneath the hood, looking at the sectors, looking at what's going on there, because the index itself, I can see it going to 6,400 again this year. I can see it going definitely under 7,000. I can see it going to 7,800. But it doesn't matter. If you're in the wrong place at the wrong time, you're going to have a shocking year and vice versa.
Yeah, and that's the thing. We quote the index so much, but it really is what is in your portfolio, unless, of course, you're just tracking an ETF. Okay, so what do you think then about commodities? We had Goldman Sachs this morning, really pointing to strength in commodities continuing. That has been the narrative coming from a lot of market watchers and analysts, that 2023 is the year for commodities, which could be pretty good for some Aussie investors.
Absolutely, and I think it's hopefully will be very good for Market Matters. But I think that it's all about timing, and that sounds a bit corny, I know, but the US dollar, in our opinion, will be the key to this year. The US dollar has taken a big hit over the last 6 months, 9 months, and that has driven up commodities and commodity prices. And our feeling is the US dollar is due for a bounce, and that will create a headwind for commodity prices and also probably the resources sector. We're seeing it this morning in a very, very small way. So the view is, our view and my view, is that BHP, the bank, it's not the banks, so BHP, gold, the resources sector will be a lot higher in 2 to 5 years' time, but maybe not 2 to 3 months' time. So that's really quite interesting. So it depends on how people play or invest their portfolios. If they're going to go aggressively long, shall we say, some of the gold stocks today, they've got to be prepared for a 10 or 20% pullback, because some of them have doubled.
Okay, so what do you think is going to be the driver of the US dollar higher?
I think the market's just got a bit, bond yields, the Fed.
Yeah.
So we've had a huge pullback in bond yields, significant. Australian 10 years have fallen by 0.75%. So everyone got carried away on the upside. I wouldn't say they got carried away on the downside, but everything's mellowed a bit, inflation's mellowing a bit, expectations are mellowing a bit. So I think it's this time for a rest. Things have gone too far up, too far back, the elastic band's kicking in. And if the US dollar can just regain a bit of ground, that will just slow the commodities down. Okay. So I'd call them more of an accumulate into weakness as opposed to jump on board now. So I agree with Goldman Sachs, but I don't necessarily think you'd go all in here if you were playing poker.
Okay, so what about gold? Because you said that you could be prepared for a 10 to 20% pullback because of the price action that we've seen recently. So I had a guest earlier, recommend Evolution Mining as a pretty solid way to get into things. Here's the spot gold chart. What is it telling you?
It's just, it's gone a long way. Look, it's gone over $300. We're long Evolution Mining. I talked about that on this show last year. But again, it's almost doubled. It's very, very close to doubling. When stocks have got that much fat in them over a relatively short space of time, they do have a habit of pulling back aggressively. Just look at lithium stocks at the moment. So what we're saying is, we like Evolution Mining. We think it will be a lot higher in 2 years' time, 5 years' time. But if you buy it today, you've got to have it in your psyche. You've got to be prepared for a 10 or 15% pullback. So maybe you only put a third in, maybe you put a half in, but you don't go all in, if that makes sense.
Where would you be most comfortable buying Evolution Mining, looking at that chart? Because you can see where it's come from, 2020, 2021. So would you say that it's more attractive to get in on some sort of a pullback that we could see, on any given day? At what price?
Okay, the answer is, of course it is. It's always cheaper to buy at a lower prices, assuming it's going up. If I was to look at that chart and say, just on a chart basis, where would I like to buy? I'd like to be buying it below $3, which is where we bought it, well under $3.
Yeah.
But I also would add a caveat there that I think over the last decade or more, I've probably lost out on the most money by being too fussy on where I buy stocks. We've all been guilty of it. So that's why I keep saying I think it's an accumulate. You can buy Evolution Mining on every down day. I think you'll be looking great in 2 to 5 years' time. Same with silver. Silver stocks maybe even more so, but there's not as many of those on our market.
Okay, what about copper? Copper's hot.
Copper's very hot. We're long Samphire. It's looked after us very nicely. It's almost directly proportional to the gold price, or an inversely proportional to the US dollar. So if I'm right and the US dollar is due for a bit of a pullback, then the likelihood is that copper will pull back too, and some of those copper stocks like Samphire will come back as well. Samphire's a bit of an unusual basket at the moment. It's attracted a lot of buying because Oz Minerals is basically off the market. So it's giving you a bit more of extra leg up because people have got to put that copper money somewhere if they're going to keep it onshore. So, you know, one could argue it's gone too far too fast. And again, we'll look at the chart there. It has doubled, which has been fabulous for Market Matters. It's well and truly in a couple of our portfolios, but I wouldn't be chasing it at these levels.
Okay, so still like the narrative, you've got to be careful when you get in and what your expectations are in terms of time frame. That's what I'd take away from this. Do I take away as well that you're pretty optimistic on 2023?
I think if you're in the right space, yes. I think the market's going to be probably, if I was to be really flippant, I'd say maybe down the first 3 to 6 months and then up, if I was to be flippant. But if you're in the right sectors, I think you can have a great year.